Welcome to Next in Tech, an S&P Global Market Intelligence podcast where the world of emerging tech lives. I'm your host, Eric Hanselman, Chief Analyst for Industry and Company Data at S&P Global Market Intelligence. And today we're going to be looking at what is probably one of the most pressing questions we get asked, and one of the things that seems to be kicking around in the technology markets today, which is all this AI stuff a bubble? And with me to discuss it is returning guest Melissa Otto, the head of Visible Alpha Research. Melissa, welcome back to the podcast.
Hi, Eric. Thanks for having me.
And it's great to have you back. This is a conversation that has been going on in so many different dimensions. We start thinking about all the different pieces to part of this question. But I wanted to start. You were on stage at our Data Center and Energy Innovation Summit last month in DC. And this was one of the topics. We had some folks from the data center side, some folks from the technology side, really starting to dig into this. But it's a big question with so many different pieces to it. I guess maybe we start for some of your thoughts about how we approach this and really how we were digging into it.
First of all, it's an extremely interesting topic that continues to increase in momentum. I mean, I can tell you I was again in DC yesterday, and it was in every conversation and every presentation that I either participated in or listened to. So it's clearly top of mind. My question to anyone inquiring about whether or not we're in a bubble is how they're defining it. The definition, from my perspective, is wearing my investment cap, is that a bubble is typically something happening around very high levels of debt. When the debt levels and the leverage in a particular company, industry, and area start to really become supersized, and there's sort of an exuberance that starts to take hold. And my perception right now is that we're not quite there yet.
We've certainly got the exuberance. There's no shortage of enthusiasm for AI and everything that happens to have been going on around it. I would make the case that there's no shortage of debt, but maybe those sort of leverage fundamentals aren't quite at the point at which we start to get concerned. But the numbers that rattle around here are really eye-watering. If we take a look at the transition in technology and just the scale, we've gone from typical sort of tech numbers kicking around and hundreds of millions to suddenly people aren't batting an eye at 10 billion here and 10 billion there. It certainly is one of the reasons why everybody is asking these questions today.
Absolutely. I think the big numbers that I have seen have really come from the mega cap tech stocks who are investing in their cloud infrastructure to lay the groundwork for generative AI applications. And Microsoft, Alphabet, Meta, Amazon, for example, have gone from spending around $80 billion in CapEx in aggregate back in 2019 to now over $350 billion. And I think a lot of that has mainly been financed with cash. We do see some levels of leverage of some long-term debt. I think one company that has started to increase its long-term debt expectations is Oracle. Oracle has not had long-term debt for a while and is now expected to ramp up. But these are coming off of very flat expectations or incremental growth expectations, with the exception being Oracle, that it really went from nothing to an expectation that they are going to have more debt.
Well, if you think about what's been taking place, it's clearly, one, let me start with capital levels. This is one of the things that, we see these numbers that we've been talking about quite a bit, which is the big four really talking about capital as percentage of revenue up in that, depending upon which one you're looking at, 15 to 19%. That's pretty serious money that's being plowed into infrastructure. They make the case that this is the investment that has to happen in order to get them there. And when your competitors are making similar investments, it's hard not to feel that you have to match that same level of infrastructure build. But that is big money.
No doubt. And we have not seen an ROI yet on that CapEx, to your point. So I think we're at an interesting nexus right now in the whole overall build and just the trajectory at which this is going. The investment community recognizes that investment is required and have absorbed and tolerated that. The question now is going forward, to what extent are we going to receive that ROI as an investment community? And how long will it take? Right now, based on Visible Alpha consensus, multiples for those mega cap tech stocks I mentioned have really increased from that to about 20 to 30 times PE. And when we think about a bubble and those high levels of debt that I alluded to earlier, that has tended in the past to lead to multiples north of 50 times PE. So I think we would want to see multiples expand a bit more from here before I would get really concerned. It does not mean that we have not started to plant the seeds for a bubble, given some of the numbers you've thrown out and I've thrown out, and the fact that we have not yet seen that ROI. But I think from a straight up valuation standpoint, combined with the levels of debt, we're not at red flag territory at the moment, but it's certainly worth watching.
Something to keep an eye on. And yeah, you talk about planting the seeds. We can hark back to bubbles of Europe. Maybe what we're doing is we're planting tulip bulbs, thinking of the tulip craze back, way back when. And one of those things that everybody keeps pointing back to as here's the example of where this can go. I don't see a lot of tulips blooming yet, but time will tell. To your point, it's interesting to see some of the rationalizations about where the explanations for where all this is headed. And some of the things you were talking about, Oracle taking on debt, they just was an $18 billion debt issuance last month, explaining to the street their thoughts about where they have to play, the fact that this is something that's going to not only help them in their current environment, but one of the things about AI that we keep debating is, are we in the early stages of the transition? From the tech side, one of the things that our gang spent a lot of time working around is so much of the work in AI right now has been in training. And it's the really intensive part in which you really need heavy-duty computational work. You need lots of GPUs. You're training all these models. Everyone has been spending a lot of effort and resource really getting all the training piece together. And the promise on the other side of this is now you start to put these models to work. You're doing inferencing, which is you're actually, once the model's trained, you're putting it out in the field, putting it into applications, actually getting it to do work. And the thought is that now this is going to expand to even greater heights. And interesting to see, this is one of the things that Oracle's mentioning about why they have to go there. They're talking about applied AI, which really is I think to my mind, is the inferencing side of this. And now the trade-off, though, is that with inferencing, it's not as compute resource intensive, and you don't need the same levels of GPUs for each individual inference activity. Now, granted, the thing is there are lots of inference applications that are going on. So the question is, how do they do it? Volume. Lots of different applications that are out there. The thought is that now this is going to proliferate. We're going to need lots more computing capability. We're going to need that computing capability diffused in much further and more broadly around the planet. And so we're definitely going to consume all these data center resources that are necessary to make this happen. And that's the plan. The question is, as you're pointing out, we haven't yet seen the kind of ROI that's coming from actually leveraging and putting all these capabilities to work. And doing that, we get lots of assurances that you bet this is going to be happening. But it is one of those things that gets us back to that question of what should we be looking for? One of the things we spent a lot of time at the Data Center Summit about, it was really talking about the pace of data center build out. Now, data center builds are booming. Everybody is building out lots of additional capacity, to the extent that we're now starting to strain the capacity of the electric grid to actually feed all of this. I was actually down in Texas just earlier this week, building data centers where you can back them right up to the Permian Basin and get all that natural gas that's flowing out of the Permian Basin and turn that directly into data center energy. A lot of stuff that's going in terms of trying to build that out. That, again, we're still in pretty energetic and enthusiastic territory here.
And it's probably going to continue. I can say that yesterday at the event I was at in DC, Scott Bessent, the Treasury Secretary, gave a terrific presentation, and he was asked about where are we in this whole AI path, and he said he thinks we're in the third inning, which I actually would agree with that in terms of like where I see valuations, how debt is starting to ramp, and then also in terms of where the overall macro environment is trending. I would like to go back to your comment about the inferencing because I think this is a really interesting area where the rubber may start to hit the road and could potentially be the catalyst that takes it to the next level. And what that next level actually is, whether it's those higher valuations, those higher debt levels, or an ROI, or some combination of the two, is unclear. But what I can say is that a couple of weeks ago, I saw the Snowflake CEO give a discussion about contextual AI. And this to me seems very similar to what you're saying about inferencing. We've trained the models to do certain things, but the actual output hasn't been terrific. It's been pretty good for simple workflows. But the moment that we start to create more complexity, have things that are more nuanced, and where domain expertise is really important, it seems to fall a bit short. And I think the other piece of this too is that these models haven't been very good at forecasting or taking the trajectory to the next level for things that are potentially more sophisticated. One of the things that came out of that talk with Snowflake was that that's an area of investment. And that's something that I'm watching carefully across the AI spectrum. So I thought that Snowflake was probably the tip of the iceberg, but there's probably a lot of other players in this that are investing in the same way. Snowflake's calling it contextual AI. To me, it's all about getting the domain right. And that's a very challenging piece at the top of the stack. Many of these tech departments have worked really hard to train the model and get it to a point of doing what it's supposed to do. And all of a sudden, at the very top of the stack, at the end of the pipeline, they are being asked to become experts on a completely different discipline and to integrate that in a way that makes the output very accurate for the user. And I think for simple things like booking a hotel or asking it a basic question about something factual, this isn't that challenging. But when we start to integrate things that are more analytical, that require multiple variables, it does become more challenging.
Well, and you've hit on what is one of the most critical pieces of this, which is this is AI is an application, is an approach that is different than the typical patterns that we've used in application development in technology. And the challenge there is that this is something where technical teams have got to shift gears, and there are new domains. And not only are there new domains, but we're now starting to tackle things, the challenges and the opportunities that AI presents are now involving the business process and the fundamentals of how the business is run in ways we typically haven't touched. We've used technology to handle little bits and pieces, but now to be able to make that shift, now we're starting to get into actually taking over the way in which chunks of the business are run. That means that technology teams have got to be much better bolted into a lot of the business itself and how the business is run. Typically, there's been a pretty significant disconnect there. The lines of business say, hey, this is what we need. Technology teams provide it, but yet the implementation and that coordination, the collaboration that's necessary is different. Now, I will make the point that the snowflakes of the world are the front edge of this because, of course, the raw material, as our listeners have heard me say over and over again, the raw material for AI is data. And you've got to get your data house in order to make a lot of the AI really work well. But you were talking about some of these references to contextual AI. There's a lot of that upfront work that gets done around ensuring that you've got data that can build context. And so data providers like the Snowflakes of the world, all the storage folks that are out there, those are the folks that are seeing some of those early benefits just in terms of the amount of activity. But the next stage, if we were on an episode of Sesame Street today, would be brought to you by the letter A, because we've got not only AI, but I'm not sure if the Snowflake folks were referring to contextual AI as agentic, but of course we've now got the agentic, our next A for the day, that's cropping up here, which again ought to be expanding what we're doing with AI, ought to be raising the capabilities. And we talk about democratizing AI a lot. Well, agentic and a lot of the tools that exist around agents now are putting the ability to do more work into the hands of more people. Maybe this is that next stage that starts to drive that. But again, we're still very early days in each of these steps. So I guess we'll have to see where this happens to go and how we happen to move this forward.
Absolutely. And one other dimension to this, just to add a little more fuel to the fire, is the macro backdrop. And one of the reasons that I think we have not seen the explosion of debt is that, or at least publicly traded debt in a way that we have in the past, is because of the level of interest rates. Interest rates have been restrictive. There has been an environment where we can see in our data that companies have not really been incentivized to take on a lot of leverage because of where interest rates are at the moment. There could be an argument to be made that it may be happening in stealth mode in the private markets. That's possible. We do see a lot of activity in private debt markets, but we don't really get a lot of transparency there. So that's something that, we're just trying to stay aware of. But I do think if we enter a period where we start to see pretty consistent rate cuts, this may unleash additional risk taking appetite and may incentivize some of these companies to take on more debt. And I think that's certainly something worth watching and seeing if that growth mindset and that risk taking behavior leads to a higher return on investment, because there is this equilibrium and optimization that needs to happen between investment leading to actual growth and returns. So we just haven't really quite seen that nexus point create that yet. Now the question is if we see rates cut and we see a lot of activity, investment coming into that space, could that potentially help be the catalyst? Or is it potentially something that leads us down a road of bubble territory?
Over enthusiastic and start.
This is where we are. I think it's great that we're doing this podcast now because we're really at this interesting inflection point in the whole AI conversation, because we've had a lot happen over the past 2.5 years. And I think we're now getting to a point where the entire industry and the investment that's happened and the expectations that are out there need to start to deliver. And we also need to see some applications that could be potentially game changing. I think we certainly saw that in the era of smartphones, when Apple came out and developed their whole application universe. And it was very transformative for people's lives to go from having just a straight handset that essentially allowed you to make calls or do text messages to something that allowed a person to essentially do most of the things that happen on their personal computer or laptop. That was very transformative. And so I think that's what many people are looking to understand about generative AI is like, how is this going to transform my life and make it better, easier, faster, more productive, more efficient, all these different things. And I think when we start to see evidence of that, that's when I think it starts to get very interesting at an enterprise level, because then it can start to really scale across organizations, across industries in ways that could be very transformative.
It sounds like you're not impressed by astronauts riding horses on the moon. I mean, come
Yeah.
on. Isn't that inspirational?
Is it making my life better?
Well, it's interesting. I think one of the things we are starting to see, and so far we have some study data about where organizations are seeing useful work. But the problem right now is that they're doing the basic stuff. They're doing summarization. And granted, a lot of what we're seeing in the study data is lagging. We're not on the cutting edge. And anecdotally, we're seeing some of those green shoots for things like software development. Code generation seems to be getting real traction. Now, there's that question of, okay, how much traction and when do we start to see the impacts of that productivity? If a lot of the stuff we're seeing now is relatively early days, how long does it take to actually see that improved feature velocity in applications, that we're now able to do more with existing staff or more with less? That seems, to your point, to be that we need to see some of those real returns to actually get a feel for exactly how big this really could potentially be.
I can say from the investment standpoint, the area of summaries is an interesting one. That has really started to evolve. A lot of it seems to depend very much on the combination of training and inferencing and how they've applied that domain to align to that specific user and persona that is the investor. Based on Pronto NLP's summaries, I've been really impressed with how well those show the investment workflow in a summary. They can go through a transcript and actually really siphon it out in a way that makes it very easy for me to understand. However, I have seen others that aren't quite as good, or sometimes they're just a regurgitation of the document itself. I'm like, is this really a summary? Does this really tease out what's very important about this company from an investment standpoint?
Insights, just,
Exactly.
yeah.
So I think there are some areas where we're seeing leadership, but there are also areas where comparable applications aren't doing that well. So I think it makes users lose confidence in the actual end game. And so they may be like, oh, well, I tried this application over here and it didn't work very well. Should I just wait until somebody tells me it's ready for prime time? So I feel like there's some of that going on as well. It's something that I hear from clients and investors. They're like, the reviews have been a bit mixed, where they're like, sometimes it works, sometimes it doesn't. I need something that works all the time that's highly accurate. So maybe we're sort of in that flux period of kind of getting there, but we're not quite there yet.
Well, and that point at which people came at this with a lot of high expectations. We build this as the magic pixie dust that was going to make this all better, and yet it has some useful capabilities, and there are a lot of the really transformative pieces are still sort of hovering out there. Although it's not continuing to create a huge amount of enthusiasm just in terms of a lot of the deal making that's taking place. Everything that's going on the data center side, we saw in the Data Center Summit, a lot of enthusiasm there. Our recent transactions about the Aligned data centers being bought out by a partnership led by BlackRock, with include Microsoft and NVIDIA, in the 20 billion sort of dollar range. Clearly, there's some thought on the investor side that people still have an appetite for this with that expectation. So maybe there's still a lot of momentum in that enthusiasm that's driving some of this deal making, but I guess a lot that we'll have to keep an eye on.
Indeed, one of the most interesting applications I have seen recently was at US Immigration. I was recently overseas with my family. We went through immigration, and there's a company called Big Bear AI that now, when you go through immigration, just has US citizens put their face into a screen. And if it gets a green check, you just walk straight through. There's no need to actually even engage with a person. But what was interesting is that my daughter, her passport is 4 years old, so she's matured a lot in 4 years and does look a bit different. The AI actually picked that up and said, you need to be looked at and to speak to an actual agent, a human. And so it sent us to have a human interaction through immigration. And I actually thought that was a pretty interesting dynamic where the AI was able to, I think, with a lot of accuracy, capture the person that was going through immigration, but could also capture when a person's appearance changed in the case of my young daughter. So I do think there is some evidence of these smaller companies that are emerging, and they do have some great applications. So it'll be interesting to see how their technology and the other use cases for it grow and scale across other things besides immigration.
And finding, again, those use cases, the specific applications that are valuable enough to really make this all worthwhile. A lot of things for us to keep an eye on. The markets still seem pretty solid, at least from the data center side, but we'll see how the markets react as this starts to evolve. But appreciate all the insights, Melissa. This has been great.
Always a pleasure, Eric.
Well, we are at time for this episode, so that is it for this episode of Next in Tech. Thanks to our audience for staying with us. Thanks to our production team, including Sophie Carr, Faran Mudation, Kira Smith on the marketing and events teams. I hope you'll join us for our next episode, where we're going to be looking at centers of gravity around security. We'll have some of the team back on to talk about some things that are happening, and an outside guest will be coming in for us there. I hope you'll join us then, because there is always something next in tech.